Everyone tells you buying a house is the ultimate goal, a symbol of success, stability, adulthood. But to be honest with you guys, buying a home can actually set you back not only financially, but emotionally and even mentally if you do it for the wrong reasons. Now, I'm not saying that owning a home is bad, but I am saying it's not always the smart move that people make it out to be. And after buying one myself about 2.5 years ago, I learned firsthand that what is sold as the American dream sometimes can feel like a financial trap. So in this video, I'm going to break down why buying a house might be one of the most overhyped decisions out there, especially in today's market. Now let's start out with just debunking this myth here, and that is that owning a home automatically makes you wealthy. People love to say that renting is throwing money away or you're paying someone else's mortgage, but the part that nobody mentions is that you're always paying someone's mortgage. The only difference is whether you're paying the bank through interest, property taxes, and maintenance, or you're paying a landlord for flexibility and freedom. And the reality of all of this is that home ownership, it's not guaranteed wealth, it's a leveraged bet, which can definitely work out long term, but like any bet, timing, interest rates, and opportunity costs all matter. So let's talk about some of the hidden costs that they do not tell you about. So when people calculate whether they can afford a house or not, they mainly look at the mortgage payment and that's it. But the mortgage payment is only the beginning. You've got property taxes that can increase every year. You have home insurance, which has been skyrocketing lately. You have things like repairs, maintenance, HOA fees, lawn care, and random things that you have to fix, especially if they break at a really bad time. That can be a huge headache to deal with. I'll try to find a screenshot for this, but I remember reading that the average homeowner spends between 1% to 4% of their home's value per year on maintenance, which is quite a bit. I mean, that's thousands of dollars a year just to stay even. And when you compare that to investing that same amount of money into an index fund or maybe building a business, the math starts to look very different. And so let me share a little bit about my personal experience buying a house. So the main reason that I wanted to buy a house was in my early 20s, I decided that I wanted to build wealth through two main ways. I wanted half of my wealth to come from the stock market and the other half to come from real estate. And after buying my first home about 2.5 years ago, I was 24 years old at the time, I have decided to now go primarily into stocks and only a little bit into real estate. I lived in the house for a little bit over a year and it is now a rental property that is just break even on cash flow. So I'm not making any money, but I'm not losing any money either each month. And the main reason I wanted to buy was I thought, if I could buy my first house before 25, I would be in a really good position. And then I could turn it into a rental and get a bunch of cash flow and then take the cash flow and save that up and buy my second house. And then I have two rentals and I have a bunch of cash flow. And I have decided I no longer want to do that for a couple of different reasons. One of them, and one of the main things that I just talked about, is owning a home is a lot more expensive than you think. For example, when I lived in an apartment before I bought my home, my water bill was maybe, $40 or $50 a month. But once I lived in my house, which was just a very normal house, it was a 3-bed, 2-bath, nothing huge, nothing small either, just very, normal house. I now had a front yard and a backyard. And so when the sprinklers were watering, that was wasting a ton of water. So my first couple of water bills, I'm not kidding, were literally $250 to $300. And the solution for this was to run the sprinklers way less. Before I was running them 3 times a week. I changed it to 1 time a week. That way I was still watering the grass and it wasn't dying, but it wasn't flourishing either. And even then my water bill was still I want to say $125 to $140 most months, which was pretty annoying. And so not only was I paying my mortgage, but I had to pay a lot higher water bill. My electric bill was kind of the same. The internet, of course, was pretty much the same, but then you have lawn care. And if the HOA ever complains about anything, you have to have somebody come out and fix it, which is pretty annoying and that costs money. And on top of that, you have different repairs that happen. So, little things will break. And if the home's not under warranty, which mine was for the first year, but a little bit after that, I had a couple of things come up, which ended up costing me money. So that's another thing that's tough there, is you have expenses along the way. And that's very annoying about owning a home, especially when you compare it to an apartment. Like if you have a problem in your apartment, let's say that the garbage disposal is clogged, then you can just call somebody and they'll fix it pretty quickly. Or let's say that the laundry isn't working or the dishwasher isn't working. You can just submit a maintenance request and they'll come fix it either that day or pretty quickly. Compared to when you own a home, you either have to do all these things yourself or pay somebody else to do it. So that has been my experience owning a home. And the thing I didn't like about this was not only are you paying the mortgage payment, but your utilities are way higher when you own a home. And not only that, you can have expenses that hit you along the way. And you're going to have to either pay for all those or become a handyman, whichever one sounds better to you. And so let's talk a little bit about an opportunity cost here. Every dollar that is tied up in a down payment or home equity is a dollar that's not compounding for you elsewhere. So let's say you drop $60,000 on a down payment, which if that was 20%, that would mean that you're buying a $300,000 house, which is pretty hard to find nowadays. But for the sake of example, let's call it, $60K. So that's the down payment amount. And if that money was invested in the S&P 500 and growing at 8% a year, then that is nearly $130,000 in 10 years. And people don't think of it this way because owning a house feels like an investment, but unless you're renting out rooms or flipping it, it is a liability that could cost you money every month. Like, yes, don't get me wrong, owning a home is an asset, but the only way to actually get the equity out of your home is either by refinancing refinancing or selling the house or taking out like a line of credit. All of these things I don't really want to do. So for example, let's pretend that you do the Dave Ramsey route and you buy a $500,000 house and you pay it off as quickly as possible. You no longer have a mortgage payment, which is great, but that $500,000 of wealth, you're not actually getting that unless if you sell the home or refinance, which is kind of annoying in my opinion. And not only that, but real estate is very illiquid. So what I mean by that is if you have $60,000 in stocks, you can sell the stocks when the market opens and get that cash back in your account pretty quickly, compared to if you want to sell a home, you got to put it on the market. And then not only that, but you have to pay fees to the agents, the brokers, all these different people when the home actually gets sold. And that's assuming the home does get sold. It could just sit on the market for 6 months and nobody buys it. So the lack of liquidity is another thing I'm not a huge fan of when it comes to real estate. And on top of this, real estate does not grow at that quickly of a rate. It typically goes up between 3 to 5% a year, compared to the stock market is more like 8 to 10%. And I'll even make an entire video comparing real estate versus the stock market. But at the end of the day, it is just a lot more expensive than people make it out to be. And one thing I want to touch up on that I said earlier is sometimes people say that renting is throwing money away. And I actually think renting gets a bad rap because it actually gives you something that's very valuable, and that is flexibility. If you're renting, you can move for a better job opportunity. You can also avoid major repair costs, and you can skip the stress of rising property taxes. Like sure, your rent's going to go up each year, but also if you own a home and let's say it's $500,000 one year and then the next year it's $530,000, there's a good chance you're going to have to pay more on your monthly mortgage payment because the home went up in value, which then causes the property taxes to go up. And plus, when you invest the money that you would have spent on a down payment or repairs, you might actually end up ahead financially. There's a lot of math to support this, especially if your interest rate is not that high. Like if you have an interest rate of like 2, 3, 4%, it doesn't really make sense to pay off your home earlier when you could just go get 8 to 10% in the market every year. And don't get me wrong, the leverage side of real estate is very, very nice, especially if you get some pretty good appreciation on the house. But in my opinion, it's not worth the headache and the expenses that come along the way. And going back to the renting thing, I feel like renting only becomes a bad move if you're spending the difference instead of investing it. Now, to be fair, buying is not always a mistake. If you plan to stay in one place long term, you want stability, and you are living below your means, it can be a great move. So some of the key reasons that you want to consider before buying is the first one being that you can comfortably afford the house after all hidden costs. This means not only the mortgage payment, but all of the utilities, and maybe you have an extra emergency fund for different repairs that may have to happen across the house. That way you have a pretty good cushion, and if something comes up, you're not drowning and feeling behind financially. The next thing I would say is that you're not depending on home appreciation to make it worth it. So like if you're buying a house and it's 500,000, if you're thinking the next year it's going to go up to 550,000, you're going to sell it, do not buy a house. Real estate is a very long-term investment. I feel like if you're going to buy a house and you plan on selling it, you got to wait at least 3 to 5 years. That's just my opinion. But again, it kind of just depends where the home value is by the time you sell it. You may get lucky, but for most people, real estate is a very long-term play, as most of you probably already know from either your parents or grandparents, because they bought a house for $100,000 in 1995 and now it's worth $800,000. Like they've been holding it for like 30 plus years. So if you're going to hold it for decades, I'm sure you will do very well long-term, but do not depend on home appreciation to make it worth it. And like I said, it is a very illiquid investment. And then the final thing is that you're buying because it fits your lifestyle, not because society is pressuring you to. Do not buy a home if it puts you in a bad financial position. You do not want to be house rich, meaning that your mortgage payment and your equity in your home, that is your only form of wealth that you can show for. The last thing you want is for your mortgage payment and your utilities to be a large percentage of your take-home pay. That can be an absolute nightmare and extremely stressful too, because if you have any lack of job security, you're basically toast at that point. And so you want to make sure you avoid that to avoid all of the stress. And so don't get me wrong, yeah, buying a house can be amazing, but in our current housing environment and market right now, we're not really seeing home prices come down, yet interest rates have been sitting between 6 and 7% for a while now. So back in 2021 as well as 2022, you could buy a $500,000 house at 3% interest, but now it's 6%, which means basically your income has to be double in order to afford that same $500,000 house. So the market right now is just brutal when it comes to real estate. Please do not let society pressure you into buying a house, especially if it doesn't look good on paper. Like if the math does not check out and you think it's going to put you in a bad position, it is much better to wait and invest that money or just continue saving cash long term. But that's just my opinion on this. For some people, the smartest move is renting and investing the difference, and for others, it's buying smart and holding very long term. Either way, do not buy into the hype and build the life that gives you financial freedom, not financial pressure. So that is it for me. I hope you guys enjoyed the video. If you did, drop a like down below, hit that subscribe button. I'll see you in the next one. Peace.